Thank you for attending today's webinar, 501R Executive Overview, What has changed with the new requirements? My name is Betsy Herb. I'm the Director of Marketing for PatientMatters, and I will be your moderator for today. For any of you that are unfamiliar with PatientMatters, I'd like to give one short advertisement about our company before we introduce our presenter for today. PatientMatters helps hospitals change behaviors with their newest payer, the patient. Our unique approach gives your team a single source for training and mentorship, technology, and a comprehensive view into your patient's financial intelligence. Transform your patient financial experience with a PatientMatters partnership. For more information, follow us on LinkedIn or visit our website at PatientMatters.com. Before I introduce our speaker, I'd like to go over a few housekeeping rules for today's webinar. We will be addressing questions at the end of the presentation. However, if you have a question, you can always type it into the question box located on the bottom right-hand side of your screen at any time, and I will present them to Lyman at the end of the session. If you're having any issues with the sound or picture quality or any other technical difficulties, please feel free to contact me directly through the chat box located again on the bottom right-hand panel of your screen. Without further ado, I'd like to introduce to you PatientMatters Strategic Advisor, Lyman Sorenberger. Say hello, Lyman.
Hello, everyone.
Prior to joining PatientMatters, Lyman was with Cleveland Clinic Health Systems for many years as the Executive Director of Revenue Cycle Management. Prior to that affiliation, he was with the University of Pittsburgh Medical Center for 22 years as a leader in the Revenue Cycle Management area. Both organizations have revenues of over $6 billion and are noted as stellar healthcare systems. In the past 29 years, Lyman has been proud to have served as a consultant and advisor with various companies nationally. He has authored over 2,200 articles for HFMA, AHAM, and other organizations in the revenue cycle arena. And he is the only person I know that has read every word of the 501R mandate and the document recently published with all the mandate changes. So, Lyman, are you ready?
I'm ready, Betsy.
Okay, go ahead and take it away. And can you put your screen on the full view so we can see the full view of the PowerPoint? Thank you.
Let's see, full view. Are you able to see this, everyone?
Bottom left-hand corner, normal view. If you can click that to the computer full view.
I don't see a full view.
Okay. All right. You see in the normal view down in the bottom left-hand corner of your computer?
Bottom left-hand corner.
It says normal view.
No, I do not.
It's the one that looks like a computer screen. It says normal view to the left, to the right of it, and then there's three icons. It's in your PowerPoint screen on the bottom left-hand corner.
It's not there. I'm sorry.
All right. Well, let's just go ahead and get started, and hopefully everybody can just bear with us. Go ahead.
So for the group, what I want to talk you through is this series is a three-part webinar. The first one's kind of a higher level, what changed with the 2015 mandate, and what evolved since 2010 when it originally was initiated. The next of the series on April 8th will transpire as to more detail around what you would do operationally and what you would do internally as a system to be compliant with the final mandate for the end of this year. And then the last one, kind of unique, would be strictly a Q&A. So after you've gone back to your group, you've talked with your team around what you've heard maybe in the industry or on these two first webinars, what questions might you have, In addition, we're going to do kind of a did you know, and that did you know would be kind of the highlights of a grand finale around did you know you have to do A, B, C, and D based on the final proposal and final ruling. So for the agenda, we're going to go through the background of, and I'll do that quickly because most of you have heard of 501R and understand what's transpired, and so I won't belabor that. Talk to you a little bit about what the Fed regs say, but throughout this I've sprinkled in the presentation where you can reference in the federal regulations anything that I'm going to speak to so that you're not trying to comb through the pages and pages of the regulations. We're going to talk about the 3 C's, which I think if there's anything that I could say to you, those would be paramount to what you want to remember. Talk to you a little bit about the 2014-2 mandate before the final ruling happened, which again you will be required to handle by and implement by December 29th, 2015. I probably won't spend as much time on the auditors and compliance, but you'll hear me keep speaking to it, and you'll have reference to this particular program so you can see how they may or may not audit you in your organization as when in the event, and I'll talk to you about the timing of when they could potentially audit you given the current rulings. So in essence, I'm just going to say to you that this is not a CMS requirement. This is an IRS requirement around health systems, particularly nonprofit, and how they will maintain their charitable community benefit to the industry and how they will demonstrate that they've done so throughout the process. So I emphasize that because typically we've had that burden of feeling like CMS always makes the regulations that we're trying to adhere to. This is around strictly the IRS and your 501(c)(3) mandate and compliance. So if you look at the federal regs, it's 78 pages. It was published in January of 2015 with the final ruling. And, this process started in 2010, and it went through a commentary period since 2010 up until the final ruling, again, that was published in 2015. There are penalties for failure to comply, and those were published in 2014. For example, the CHINA that we're going to talk to in detail, it is a $50,000 penalty if you do not have a CHINA published in the appropriate manner, as well as if you are not adherent to 501R in general around charging and around communications, you can be penalized up to $50,000 each time they audit you, and I will go through that process with you more in detail. There are 3 requirements, and these are the basics of it. You have to have an established written financial assistance policy. We'll talk to that in more depth. You have to limit the amount you're going to charge for emergency or other medically necessary care to individuals that are FAP eligible. I'll keep emphasizing FAP eligible from the stance that if you do propensity to pay, if you do any type of propensity for eligibility, these are patients that you believe might be eligible for your particular charity program. And then 3, how will you make a reasonable effort to determine whether an individual is eligible for your financial assistance program? So there are 3 C's of 501R. Again, I mentioned this is paramount. The first is the community health needs assessment. The second is communications, and the third is charging. Before I go on to the next screens, Patient Matters will offer to you that we can give you examples of a typical community health needs assessment. And as I walk through that with you, what it might look like, again, we have a template of other systems that have embraced the CHINA. We can give you examples of policy and procedure of what your 501R may look like or may not look like, as well as what a statement or communication may look like to your patients that would be 501R compliant. And then finally, from a charging perspective, we don't have so much around what we can deliver, but some advice as to how you would maintain and present to an auditor with the IRS that you are compliant with the charging mechanism. And again, I'm going to go in much depth with each one of these. So for the CHINA, which is the Community Health Needs Assessment, you have to conduct it every 3 years as a health system. You have to demonstrate what was your strategy of how you conducted the CHINA and how you implemented your community health needs assessment. And again, I'm going to talk to that much more detail as to what the 2015 rule said. You can collaborate with other hospitals in your local area around doing this CHINA or community health needs assessment. What does that mean? So in the CHINA, again, I reference at the top where you can find this in the Federal Register, what segments, so that you're not going to try and comb through the 78 pages. You have to describe your implementation strategy. You have to define the community that you're serving. The community means what population you're serving in your local area. You have to assess the needs of the community. You have to ensure that the community includes the underserved, low income, and the minorities. So in the original, it felt and smelled like all you had to do was the typical, here is the community we serve. You have to give much more emphasis that you are trying to strive to support the low income, minority population, and the underserved. You also have to look at, within your community, the stakeholders. So those could be your local government agency, it could be the schools, it could be your churches, it could be various forums where you would solicit their input that you are serving the community. And we're going to talk to that a little bit more in depth, but it cannot be just your in a vacuum, this is what a CHINA is and how we serve the community. There are stakeholders that you're going to have to discuss this with. You will have to document that, again, every 3 years on your calendar tax year. So if you are on a calendar year, or if you are on a June or September fiscal year, you will have to document that every 3 years. And your requirement will be, it says in the federal reg 6 months, but the auditors say on the 15th day after the 5th month of that tax year for you, whatever that may be, you have to show or have the policy embraced, adopted, and in place and updated. And again, the penalty is $50,000 if you do not have that in place, and they can audit you on a very frequent basis against that first penalty. With 2010 to 2015, in the final ruling said, in the CHINA, you're going to have to talk about what you are doing about illness prevention, adequate nutrition. You're going to have to address the environmental, social, and behavioral needs of the community. You're going to have to ensure if you're an ACO and or you are an HEIE, you have the same definitions in those policies and procedures that you have in CHINA. You're going to have to discuss your collaboration if you're doing that as a internal large health system or other health systems within your community that you've collaborated with. You're going to have to describe what efforts you've made with the local government, schools, or any other forum as to how you solicited their input, and you must have documented what their feedback was, what will be the impact or your anticipation of what you will deliver to that community, and then you'll have to include your ED in the community benefit. If you talk about communications, so communications is a tough one because originally in 2010 there was a sense that you as an organization were going to have to describe everything you were going to do to that patient, which meant I am going to send Betsy 3 bills, I'm going to call her on day 30, I am going to send her to collection on day 120, or day 90. But the new rulings say you do have to have a formal written policy and procedure around your financial assistance policy. You will have to communicate it. I added in here 2 policies. What I mean by that is you should have a 501R policy overarching, which means what is our CHINA policy and procedure, what is our communications policy, and what is our charging policy, and then subsequently you would want to have a policy around each of those internally because, as you know, as industry leaders, these will keep changing. So have an overarching policy, and as well as then subsequent policies that show the detail, and those you will continue to update. I'll pause there for a minute and tell you that you have to have a system owner of 501R. That means that could be your CFO, it could be your compliance officer, it could be your legal entity, but when the auditors come in, they will ask you who owns 501R, and that will be a start of their audit process. I typically don't recommend legal or compliance. I typically recommend the CFO and or the revenue cycle leader, someone who is close enough when they start to ask specific questions around the details of your day-to-day operations that could answer those questions. But certainly your legal or compliance could do it. But just remember that the first item they will ask you for is who is the owner of 501R. You do have to give full disclosure of the administrative treatment of the patient, and that can be in a separate policy and procedure from your with your day-to-day operations. And that's why I'm emphasizing that they tell you to have a policy and procedure. I am recommending that they are divorced. One is a high level, and you have a separate day-to-day P&P. Now you can publish or communicate it on your patient portal or your website. And this is where your third parties could come into play. If you use a statement vendor, if you use a particular mainframe like an Epic or a Siemens or a Meditech, etc., you have to ensure somewhere you are publishing and referencing to the patient where they can find your particular FAT policy and procedure. That is a little different than you don't have to give full disclosure at every conversation, which was originally proposed, that you would have to tell everything you were going to do to Betsy. Now you can reference them to some particular site. Now, if the patient asks you for a hard copy of your financial policy and procedure, you are required to do so. So know that you cannot just succumb to everyone is computer savvy, that they can go to your web portal, you are required to give them a hard copy if requested. You will want to make sure there are notations on every statement as to where the patient can find your FAP policy and procedure. So if you use a third-party vendor, you want to ensure that that is communicated. And again, it can be as strict as what your website is, but you will want to include at minimum your phone number and who is a contact in the event that they do not have access to some technology to see your website. I typically recommend, so that you don't have hard conversations, since one of the requirements is you have to communicate to the public in every venue that you can what your financial assistance policy is, to look at having tent cards at your front desk with your financial counselors, so you're not getting into crucial conversations around, did you know we have a financial assistance policy? It is simply, if you think you may be eligible, here is how you can contact us for that verification. You want to ensure everyone throughout the process understands your FAP policy and procedure. Part of the audit is they will come in and interview your personnel in terms of, do they know what your FAP policy and procedure is? How do they communicate as an individual as to what that policy and procedure is to the public? So education is paramount in terms of being compliant. So another part of the communication in your policy and procedure, you need to describe how is a patient eligible, what makes them eligible, meaning that are you including the insured, underinsured? Is it only in your state as part of your policy versus that you do it nationally, particularly if you service publics outside of your particular state? Again, I mentioned, because many are now sensitive to the underinsured versus the true self-pay population. And when we get to the charging, I want you to keep that in mind, because it will be a challenge for your organization. And then it gets into family size, the markup of the federal FPL, etc. Do you offer other free or discounted care? And again, we're going to talk about that in the charging, but why that is important is you will be able to take anything that you discount to a FAP-eligible patient to charity, okay, based on the charging mechanism. But if you offer other discounts, prompt pay, or anything other in your policy, that is not a charitable reporting event. How do you calculate your charge? And we're going to talk about that in the charging segment. And that's very important because you will have to have that well documented. MTELA, we're going to talk about that a little bit, but those of you are probably pretty familiar that historically in the emergency room, based on the patient's financial opportunity or insurance, you cannot discontinue care. So the recommendation from MTELA, emergency treatment, was always that you would have to just basically register the patient, Betsy, address, no insurance, treat the patient, and then have financial discussions and or what opportunity that you might give them as financially eligible as a treatment plan. And you want to obviously include that in your ED communications. There is a requirement that you offer a minimum of 3 statements, but we're going to talk about that a little bit in the next 2 commentaries. On the 120-day clarification in the final rule, everyone heard this kind of concern that said, oh my gosh, I have to give Betsy 120 days to qualify for FAP. And then if she doesn't complete the application, or if she is non-compliant and on day 119 says, health system A, I think I am eligible for your FAP program, you have to give her another 120 days. Here's what that clarification says. If you identify that Betsy is not FAP eligible, whether that's through presumptive eligibility or she is non-compliant, refuses to pay, or you've come to conclusion she is not FAP eligible, you can continue the billing process as you historically might have done, which meant you don't have to wait for 120 days. You could send Betsy to collections at 90 days if, in fact, you've determined she is not FAP eligible. What you cannot do before 120 days is take on any ECAs. And we're going to talk about ECAs, but ECA is an extraordinary collection action. That means you can't credit report, you can't have her arrested, you can't put a lien on her home, you cannot do anything before 120 days, even if she is not FAP eligible. You can send her to a collection agency, but they cannot take on an ECA practice. And I have a couple screens just strictly around ECAs because it's so complicated. But at the end of the day, there was a lot of concern that you could not do anything with Betsy until day 120, but you can accelerate the process, but you cannot take on those very stringent collection efforts until after day 120. After day 120, if in fact Betsy demonstrates to you that she is FAP eligible, she completes her application, etc., then you will have to reverse anything and everything that you've done to Betsy between 120 and 140, or 240, I'm sorry. So the reason why everyone's sensitive is, does this mean I can't do anything until 240? The true answer to that is, I can, but any time that Betsy demonstrates she is FAP eligible, you will have to do the inverse. If she made payments to you, if you took on credit reporting after day 120, if you put a lien on her, and then she ultimately becomes FAP eligible, you will have to reverse that. So from an operations perspective, it is a challenge. From a AR revenue stream and the typical cycle, what I say to you is, depending on how confident you are that she is not eligible at day 120 or before, then you could take those actions, as well as you could take any action after day 120, but realize that you will have to reverse anything if you identify that she is FAP eligible. And then the new ruling said originally, if your community has a language of more than 10% originally, then you would have to communicate in that language your FAP eligibility to that public in those languages. The final ruling said 5% or more of your population has to have a communication in their particular language. And again, I'm trying to give you some references to the Federal Register. So that 120 days in the communication, you need to realize that the starting point is not at discharge, but after your first bill. So if you do not send a bill until day 30, they actually get 150 days. If you don't send a bill till day 5, they get 125 days. So the clock does not start until you have literally sent them some physical statement after discharge. Each statement must reference your website and phone number. The next one is very painful. So if your emergency room and you use a third party that is not a part of your health system, they will have to follow your financial assistance policy and procedure. So if you use someone other than your own employed physicians, the new ruling says they will have to adhere to your system's FAP policy and procedure. If you have unemployed physicians that service your patient population, you will have to, and I recommend this in an appendix, you will have to describe who does follow your policy and procedure and who does not. But I will stress to you that if no one follows your FAP policy and procedure, that is unemployed with yours, but they service your patient population, you could simply say none of our community unemployed physicians follow our FAP. If any do, you will have to disclose that as, and again, I recommend that as part of your appendix. And then there is a caveat to it that's kind of a little bit gray, and that is the new policy does not say that you've got to demonstrate that you made an oral communication of what your FAP policy and procedure is, but it does say that you have to have made an effort. So what I recommend is in your policy and procedures, particularly the operations policy and procedure that would be in this next forum, you may want to say, we're going to put them through a dialer, or we, if they call in to our customer service, we are going to, at the end of the call, say you may be eligible for our financial assistance and give them a reference to where they can see it. Again, that would be very difficult to audit, but it does say that you will have to make every effort to orally communicate it. So I mentioned that we're going to talk about extraordinary collection actions. So an extraordinary collection action, by definition, isn't that you have placed it with a collection agency or that you've sold it to a debt buyer. It is strictly what actions they may take after you have given it to them. So if they credit report and you allow them to do so, if they do liens, if they would arrest the patient, if they would take any action aggressively that I've outlined here, you would have to tell the patient that will happen. You would have to be very explicit that it will happen and what will happen, and then you would have to give them 30 days notice. So let's say that you credit report with your collection agency, right? The hypothetical is 30 days before you would place it with the agency, you would give them a notice. We are sending you to agency A, and they are going to credit report you if you are not financially eligible according to our policy and procedure. Or you have to be explicit and say, we will put a lien against you. And there's a lot of gray area about whether you can say, we may do this versus we will do this. The policy as it exists today says you will have to say, this is what we will do, which may mean that say you place it with your agency, and this is why 501 our federal regs say your extension to you, your collection agency, debt buyer, second agency, is an extension to you, is going to be required to take some action. And that means that you may place it with them after that 30-day notification. We are going to credit report. And then they don't demonstrate they're financially eligible. You place it with the agency, and then the agency is, with your approval, allowed to put a lien. The agency would have to communicate to the patient with a 30-day notice that if you're not FAP eligible with Hospital A, we are going to place a lien on you. Now, you could do that at stage 1, which means before you even gave it to the agency, it said, we are going to place you with a credit bureau. We are going to put a lien on you, okay? Whatever action you are going to do, but if it's progressive and you allow those external entities to take actions progressively, that has to be communicated as an ECA each time specifically with a 30-day notice. So if you don't practice in ECAs, you're not required to that 30-day notice. So if you don't credit report, if you don't allow, even if you debt sell, if you sell to a third party and you sell your debt, but you don't allow them to credit report or do liens, you do not have to do anything other than with that 30-day notification, other than place it, okay? Another part of the ECA is you cannot charge them interest. At the same time, if at any time after the 240-day period, the patient demonstrates they are eligible for FAP, you do not have to grant them financial assistance as long as your policy says such that up to day 240, if you are eligible for financial assistance, we can grant that to you. And during that time, they may go to an agency or not, okay? If your policy says that after day 240, we will not give you financial assistance, then you don't have to give that to them, okay? If it's not well defined in your policy, you will have to grant them financial assistance no matter how far out they might present it. Now, keep in mind, in the third session I said, you know, we talk about did you know. So one of the did you knows would be an example. You're not required before December 29th of this year to grant that patient anything. But we'll talk about that a little bit as to why you might want to. But if Betsy was here last year and you adopted 501R today, your policy has to define what date the policy starts, so in that any prior services are not eligible or required under the 501R ruling. So you want a strict effective date to what your 501R policy is. Now, if you elect to start to embrace parts of this and pieces of this process, but don't want to make a mandate until the requirement of December 29th of this year, you could make your policy effective December 29th and start to embrace the policy and procedures today as much as possible. But you wouldn't be held to it. So again, you have to describe that you've made reasonable efforts in your policy procedures and refrain from any ECA for at least 120 days from the first bill. And then you have to give them a 30-day notice. So if it doesn't get any more fun than that, we're going to talk about charging. So charging has been an animal in itself, and that means that how do you charge a FAP-eligible patient based on the federal poverty guidelines? And basically what it says is you can do one of two methodologies. You could look at it retrospectively for your last tax year of everything that was charged and paid, okay? So based on everything that was charged and paid that ran through your system, through your GL, and what was the average? So Originally, people thought it was the lowest of three payers, Medicare or Medicaid. The final ruling says, no, it's all-inclusive. It includes Medicare, Medicaid, and commercial for that last tax year. And you'll want to document and keep a hard copy of how you've demonstrated in your policy and procedure what you historically were paid for. And you'll have to do that every tax year to update it and update your policy and procedure, because if you raise your charges or change your policy and procedure, you will have to have that well articulated as to how you did charge the patient. So what does that mean? It means that if last year, prospectively, the average for all your payers paid you 50 cents on $100, you can only charge the patient $50. Okay? You can write that other $50 off to charity, and you can make that a charitable event. Okay? You'll see throughout this, I recommend that you create a separate rev code to that particular write-off that is why you're writing it off to AGB, the average gross billed based on your last tax year, and then it is a charitable event. If, in fact, you do other discounts beyond that 50 cents on a dollar, prompt pay, or anything else, that is not charitable. Now, if you want to offer the patient 70% on a dollar, on 100, you can only take the 50, and the other 20 is not charitable. You could take a prospective review, which means based on your Medicare and Medicaid population, you could take an adjustment prospectively versus retrospectively, which obviously would be much more aggressive. So you typically on Medicare or Medicaid probably get a blended rate of maybe 20 to 30 cents on a dollar. So that means you would be, on that $100, you would be taking a 70% write-off versus 50%. Why health systems might want to be more aggressive, I'm not sure, but you have either methodology. One is much more liberal, and one is much more conservative. But again, any discounts above either methodology cannot be taken to charity. But the other, the basis to your calculation can be. That gets into a couple of arguments around, health systems now saying, am I going to give the insured population charity, or are they going to be included in my financial assistance? So if your payer pays you less than 50 cents on a dollar today, you can take the additional up to the 50 cents as a charitable event outside of their deductible and their out-of-pocket expense. So if you look at exchanges today, federal exchanges as an example, and maybe they only pay you, the silver pays you 40 cents on a dollar, and 60% is out-of-pocket, you could take that 10% as a charitable event if you include the insured in your population. Okay? If you don't include the insured, it has to articulate you don't include the insured. And this is why kind of the inverse of what the intent of the IRS was, which is many health systems are saying that's too complicated, I'm not going to include the insured, since I can only collect 50 cents on a dollar, and how do I make my system whole? How do I communicate that? How do I educate my internal staff of what activity and actions they can take? So unfortunately, that's been kind of a byproduct of the new final ruling. So again, I talked about separate revenue codes. There is a revenue impact. So what you need to realize that, systems like Cleveland Clinic started to adopt this in 2010. in spite of it not being mandatory. What 2014-2 said was, we recommend that you start to embrace this policy and procedure because it is going to happen. And now it has happened. And that's why, throughout this I said this is very complex, but you want to definitely contemplate when you want to start doing it because it definitely has operational impacts, communication impacts, but more importantly a financial impact. What does that mean? If you change your policy from the insured to only true self-pay, or if you only can charge 50 cents on $100 versus you used to get paid on that, you don't know what you got paid. Some of those patients were on a payment plan. Some of those patients paid you with a credit card, but you didn't track that. You didn't know that they might have been FAP eligible. You tried to collect it. So there is a percentage of this population that now is eligible for FAP, depending on your policy, that might have historically paid you. And you don't know what that is because you never tracked it, and no system probably tracked it. And then finally, I just emphasize that if there's any silver lining to this, you should take the opportunity to create a separate revenue code and take that charging adjustment to charity when and if you can. So we are going to share this policy or this presentation with you through some forum. I did give you what the inside scoop is around what an auditor will do and how you can be compliant. What they basically will do, come in, who is the 501R owner, give me your policies and procedures, and then they're going to go back and audit a particular sample of patients to see if you adhered to what your policy and procedure described. Okay? If you're going to embrace it today, be sensitive to when you become too restrictive to adopting that policy procedure versus trying to embrace 501R is part of what I would recommend to you. That's not to say don't start to do it, but you could do it on a smaller scale, but your final 501R policy and procedure probably wants to have a mandate, particularly the end of the year. If you look at how they're going to audit you versus when they're going to audit you, obviously, I mentioned to you China, you will have 5 months and 15 days from your last tax calendar year. So keep that pulse. If you don't have one today, or if you need a template, reach out to us and we'll help you with giving you examples of one. But at the same time, if they obviously could not come and audit you any more or sooner than 5 months and 5 days. On your communications and on your charging, since typically you have 120 to 240 days, you can trust that they could come in and test you sooner than 120 days. But hypothetically, it would be probably my consensus that they're actually going to come in and audit after that particular period that you have to adhere to. So again, I got very detailed as to what they will be looking at or what they can look at that you as a system could look at or you can ask questions of. But at the end of the day, we wanted to share that with you because we believe that don't be as sensitive as to believe that on January 1st of 2016 you will necessarily be audited, but how will they audit you and how can you be compliant? So for you internally, I'm giving you a couple minor questions. What are the 3 C's? China, communications, and charging. What does 2014-2 say? It basically says you should start to embrace it now and start to adopt it sooner than later because they can be in your office as soon as January 1, but I kind of shared with you that I don't believe that would be highly likely. What's the first item they're going to ask you for? What is your FAP and your EMC policy? and what is the date of the mandate. So with that, Betsy, I kind of was very winded in talking through this, but I open this up for any questions.
Okay, Lyman, just give me a minute here. I'm actually showing my screen, so I need to look at the questions real quick. And I apologize for the technical difficulties today, but we're going to keep rolling on here. So we do have a lot of questions, and I'm going to start with the first one. Can we get the slides? Of course, electronically. We will go ahead and get those out to you, I would say by the beginning of next week, but maybe even sooner than that. So yes, we will do that for you. Second question is the section regarding the PLS, is it required to go to all patients post-discharge, or can it be on the opposite side of the FAP application?
So you don't have to publish it with every statement. You only have to publish the PLS if you are going to do an ECA, which means, you know, you're going to take some extraordinary collection action against the patient. What I typically recommend on the statement, you offer the patient the application process on the back of your statement to make it even much more easily, because now you've already adhered to that requirement that if they want a hard copy, they have a hard copy, and then as well as the statement messaging says where they can go to your particular website and or what phone number they can contact to get any specifics to see if they are eligible. I hope that answers that.
Okay, the next question is, under the EAC policy you have referenced that the communication must state that the patient will be credit reported or a lien will be issued. Isn't that a direct violation of FDCPA?
No, it is if you only say I may do it. What you are required to do is to say what actions you will take. So that is a great question, because it has a little bit conflict of the 180-day rule, but as long as you've communicated that, you've met the requirements.
All right. The next question, can you raise a question around what can providers do to make their statements 501R compliant? Pretend that, he says, yeah, I guess that's the end of it.
No, I think everybody's asking in general, you know, again, I'll start with the clock starts on the 120 and 240 days with that statement. As much as you can communicate to the patient to being the potentially FAP eligible, you want to do without being overbearing. So, you know, we have examples. There's companies out there, statement vendors, that have done a very good job, such as like an HMC or so on, who has really, RevSpring has shown, you know, little windows that talk about, you know, we have a financial assistance policy. If you think you're eligible, go to our website or call us, and or on the back of the statement is a very well articulated, here's, you know, your qualifications for our FAP policy.
All right, I have a couple more. One person had two questions. Can you have different pricing for the emergency room? And then they also wanted to know what are the penalties?
The penalties are $50,000 once they audit you around any of the three elements, around CHINA, communications, and or charging. So they can go after you for all three at $150,000, okay, for lack of better words. That is why I recommend that you have an overarching policy around 501R that says, this is the one we're always going to adhere to, and then from day-to-day operations, you know, those could keep changing. But once they ask for your 501R policy around those three, make sure that you're compliant to it. But they're not going to get into specifics of did we call Betsy on day 30. That way, that's a day-to-day operations policy and procedure. Okay. What was the second part to that question, Betsy?
Can you have different pricing for the emergency room?
So from a pricing mechanism, you can have your own charge master. They will have to follow your financial assistance policy, as I mentioned, whether they're part of your system or not part of your system. But even if you are part of a health system and you have another hospital 5 miles down the road, they can charge different than you. Okay? Your policy will have to describe how you did your charging assessment. So if hospital A, that's part of you, as an example, is a $90 charge, and hospital B charges $100, you will have to demonstrate the discount difference, but you don't have to have the same charges. Okay? The same way with your ED, you can charge differently in your ED, but your write-off, whether it's 50 cents on a dollar or whatever, has to be the same.
All right. The next question we have, if a patient is on a payment plan, then qualifies, how do you handle it?
You have to refund the patient, unfortunately. But once they are FAP eligible, even though they were cordial enough or compliant enough to make payments to you, once they're FAP eligible, and that means that they were eligible for 100%. If you have a sliding scale, that's a different story. You can have a sliding scale, and you could keep a component of that if they meet the sliding scale. But within the 120 days, you would have to refund the patient.
Okay, and the last question that I have, so if anybody else has one, please go ahead and put it into the question area, is when does the 120-day clock start?
It starts at your first bill. So if you send a bill on day 1, then the patient literally has 120 days. But if you don't send a bill until day 30, and that's your first bill, the patient gets 150 days. So the audit will be based on the first billing statement.
All right, and I guess the last thing that I'd like to ask you, Lyman, is through your travels and giving this presentation and talking about this, what is a question that you could talk to the audience about that maybe has come up several times, or something that was perplexing to people that you might want to share? We got like 1 minute.
That's a great question. I try to draw that out today because I try to show what the final rules basically have said that you have to do to be compliant, and those were around the CHINA. The CHINA became much more aggressive than just saying, I serve the community. Communications became a little loosened up, that you didn't have to each time I talk to Betsy say, I'm going to do this to you, Betsy. I'm going to do this to you, Betsy. I'm going to do this. The charging, was a little better from the standpoint that people thought at first it was going to be the lowest of your 3 payers, versus now it can be a retrospective of a look back or go forward. Those 3, and that's why I try to draw that out in this, seem to be the most sensitive. But add to that I think the next session is going to speak to what a policy and procedure would look like specifically around addressing those sensitivities that keep coming out now the final ruling is out there.